I've been trading for 7 years. And after trying everything from trading penny stocks in my high school library to trading support resistance to ICT to trend lines and then moving averages, market structure is the #1 reason I've been able to become a full-time trader 3 years ago. And since then, using what I'm about to teach you, I've been able to travel the world, make tens of thousands of dollars every single month, and also help turn over 400 students into profitable traders within just the past 12 months. And in this video, I'm going to give you a full market structure course from beginner to advanced, showing you exactly the secrets that I figured out that allowed me to become profitable so you can do it for yourself right after watching this video. Now, I'm putting timestamps in the description below if you want to skip around to different chapters, but I promise in every piece of this video, there is something that you are going to learn and use in your trading to start making more money. And after watching this video, if you did learn something from it, if you want to learn more, I have a free community called The Vault. We have over 6,000 students inside. We have a bunch of different courses in there, all for free, as well as live trading once a week. So I'd highly recommend you check that out. I'll leave a link for that in the description as well after you're done watching the video. But with that being said, let's dive right in, and I hope you guys enjoy. All right, guys, welcome to this course. You're going to become a master at market structure by the end of it, okay? Now, this first video is going to be more of an intro. We're going to go over some things that are really basic, really concepts, get into some more advanced stuff later in the series. But you got to get the basics down if you want to understand the rest of that stuff. Now, before we do that, I do want to let you guys know that trend in itself and market structure in general is pretty much the basis of my trading. Now, of course, I look at a few other things. I look at supply demand, I look at volume, I look at other confirmations that we have. But the basis of my trading is really about understanding market structure. If you can understand who is in control, bears or bulls, and you can do that with market structure, you can end up making a lot of money. So let's dive into the first topic and show you guys a little bit more about what I'm talking about. By the end of this series, you guys are going to become master. You're also going to have a strategy that I'm going to show you in the last video, specifically on how to scalp with trend and nothing else. Simply using trend. It's a scalping strategy I use. Works extremely well. So let's start with identifying the real trend. Now, as you guys probably know, trend is based off the fact of price and only price, okay? And what that simply means is higher highs and higher lows, right? Price in its general form is it comes with low points and high points. It's always going up and down, right? And so if price is making a low, and then a high, and a low, and a high, a low, and a high, we continuously see the new lows taking out new highs. When I say take out, I mean price just moves above that new high, makes a new low, we take out that high again. And this pattern of higher highs, higher low, higher highs, higher lows is in an uptrend, okay? It's very, very easy to tell this is an uptrend. I know, very basic stuff. Stick with me, okay? It's going to get a lot more advanced than this. Same thing with the downtrend. Price making lower lows and lower highs, lower lows, lower highs, etc. This is in a downtrend. Now, the thing with market structure that a lot of people get mixed up is that, not even mixed up, it's just the fact that stocks, S&P 500, markets, they don't always go in trends like this that are this easy to spot, okay? Sometimes markets will do things like this. You can see the S&P 500 will go down, up, down, a high, we'll make the same high, consolidate, another high, another low, and then go fast like this. When you start to look at this, like, yeah, it's a little bit easier to see it's on an uptrend, but this area here gets a little complicated. See a high, a lower low, higher high, and then an equal low, some consolidation, another low that's equal to here, and it gets a little bit confusing. Okay, and by the end of the series, you guys are going to know exactly how all this works, and you're going to know pretty much how to look at this and say, okay, I still know who's in control. I know that I shouldn't be getting short here because price is going to move higher. And that involves a few other different factors we're going to be looking at. But simply for this video and what you need to know, like I said, it's kind of like an intro, setting you up for the rest of the videos. But the basis of trading and understanding this is based off higher highs, higher lows, higher highs, higher lows. Lower lows, lower highs, lower lows, lower highs. That's going to be a downtrend. This is your uptrend. Complete basic stuff, okay? In the next video, I'm about to show you exactly how to spot a fake trend, okay? Because sometimes price will do something like this. We'll be making higher highs, we'll break some of these lows, and we'll just keep going back up. And that's going to be extremely confusing if you start thinking we're in a downtrend, right over here, but then price ends up going up. So stick for the next video. I'm going to show you exactly what that works. And the rest of the series, you're going to become a master at market structure. understanding trend, and you can use this across all markets. So I'll see you guys in the next video. All right, so this video is going to go over how to spot a fake trend, okay? As we both know, this market likes to fake a lot of people out all the time, okay? That's just how the market moves, and that's how it's designed to trap retail traders so they can get stopped out at the exact bottoms and things like that. So there's a two-part series for this one. It's about spotting a fake trend. There's two ways to do it. The first one I'm going to show you right now. So let's get into it. Now, when it comes to a fake trend, obviously we understand a real trend, okay? For example, if this is our trend, we're in an uptrend. Now, we first need to understand what is a shift in trend before we get to that, okay? And a shift in structure per se, right? If we wanted to see price go from an uptrend to a downtrend, what would we want to see, right? We would want to see price take out a low and then start making lower lows and lower highs, right? So you'd want to see price come back down and then fail to make a new high up here and then make another low, okay? And at this point, now we're making lower lows, making lower highs, and we can continue this process, okay? So the first sign that we get that price is going to shift trend from an uptrend to a downtrend in this example is when we get a break of that low, okay? In an uptrend, highs should hold. In an uptrend, lows should hold. In a downtrend, highs should hold, okay? And so we know if price is continually holding the previous low that we have and it cannot get below it, we're in an uptrend. And so that first sign that price is now going to shift into a downtrend is when that low breaks. And this is where the fake trend comes into play. This is extremely dangerous to immediately think when price breaks that low that we are now in a downtrend. Okay, this is the fake. This happens all of the time. All of the time. Okay, you'll see price in an uptrend just like this, blah, blah, blah. You'll see price make a new low. Everybody's like, oh my God, we broke this low. We're starting to see a downtrend. Price pops up. They go short here, expecting to move lower, and then it just goes right back up. And you're thinking, what just happened? You know, I thought we were shifting trend. I thought we're starting to see a downtrend. Why is that happening? And so I'm going to explain that in this video right now. The first reason for that, okay? Now, the first reason is actually something you may not expect. You have to use one little tool to pretty much on every platform, every broker, the Fibonacci tool. Now, I'm not going to go out here and show you, hey, listen, you got to look at the 0.236, the 7 point. No, you don't need any of this, okay? The only level that's important is a 50%. You're thinking, Jordan, is this like some number you pulled out of thin air? Like, why 50%? Where did you get this from? 50% is not something I came up with. 50% is something that is known in the institutional markets, simply because if you think about it logically, right? If I am even for products, even for whatever it is, what is 50% known as? 50% is known as the fair price or the middle price, which means if I'm a buyer, anything that's below 50% is going to be a good deal, right? In terms of price or whatever you want to call it, right? If we're in a market and I'm looking to buy something and I can get it at a 50% or not even 50%, if I can get it lower than the middle price or the fair price or the average price, whatever you want to call it, that is a good deal, which means anyone who's buying below 50% are going to be institutions or the market makers, okay? The hedge funds, the ones with money, right? Trust me, they're not going to be buying while the price is high. They're only going to be buying below 50%. They're only going to be selling above 50%. That's extremely important. So let me show you an example of how this works and what this means. Simply means in an uptrend, every low that goes below 50% is what we call a strong low. So let me grab this here. So we have a deep pullback. That's a strong low. Another deep pullback, strong low. Another deep pullback, strong low. These are all strong because price went lower at least, or right to it, the 50% mark. Below it, below it, below it. And then you go ahead and you move it. This one goes up here, this one goes out in here, below 50%. And the trap that a lot of people get put in is that a lot of times, price will make a low that is just very shallow. That'll make a new high. We'll see something like this, right? You may pull out your little Fibonacci tool and you go, okay, we probably retraced like maybe 20%, I don't know. And we made another high. And this is when you got to ask yourself, are the institutions or the hedge funds, are they buying up here? No, they're not going to be buying up here. Trust me, if we are in a market that looks like this, Okay? They buy low, they sell high. They're not going to be buying while the price is high. Okay? A small pullback is not enough for them to get in, which means you don't want to be getting in there as well. Now, could we have a situation where price just, has these small pullbacks and keeps going up and up and up, and you're like, Jordan, I'm missing the move? Yes, that can definitely happen. But if you want to have the best setups, the best probability of success, you only want to be buying pullbacks that are lower than 50%. So, what is the fake? What does that mean? How does this work? Well, a lot of times we'll get something like this. We'll get a deep pullback, we'll get a small pullback, and the price will end up breaking that low. And we'll go in back up. Price breaks this low here, then everyone at this moment in time, when price is down here, starts screaming, oh my God, we're in a downtrend. Okay, we have a sharp move lower, we break that low, and we start to say we're in a downtrend. This is the trap. This is what we call a bear trap. Right there. Okay? A bunch of people see this short, or see this break, and they're like, hey, I want to get short. They wait for a pullback, expecting another move lower, and price goes higher. This is a very common pattern that you see all the time. And you'll notice a lot of times this pullback will go at least 50% from this retracement here, and then end up ripping right up. Okay, when you start to add in supply demand, there's a lot of things that get involved with this. You'll start to notice, hey, there's a really good supply zone here. Why is it not holding? Because of market structure. We are still in an overall uptrend. Okay, this is not a real low. This is not a real low. Okay, take a screenshot of this. Do whatever you have to do. This is the bear trap. Okay, do not get trapped. This is the fake trend. So let me show you two more examples so you can actually understand this and see this in the chart. Now, Amazon, you can see, you wouldn't be able to tell until recently, but we're starting to see forms of an uptrend here. Okay, we've been in a downtrend since 2022, making lower lows and lower highs. Let's just say we know at this point that we're in an uptrend. So what does price do? Price moves up, we have a pullback, we move back up. Maybe thinking, Jordan, if we make out, our high points are our low points. We have a high, we have a low, we have another high. The price goes up, and we end up breaking this low. And you say, Jordan, we broke that low. That's the sign that, hey, we're starting to see in a downtrend, right? We got that break. We should see price move over. Let's get a pullback up to supply for a move back down to $80. We just end up going right back above it. The reason is, did we pull back 50% from this low to this high? We did not. Okay? Institutions are not going to be buying in this area. Okay? They were buying down here. When price goes up and we have a small pullback, they're not buying up there. So then we see that breaks. Price breaks this low. And then we can, once the new high establishes, we can move our retracement up. And now, over here, now we're in a good deal. Right? Back here, we only knew that price went from this low to this high. This would not be a good deal to buy in. Okay? And we can talk about time frame of in the higher time frame, that's a really good deal. But that's for another video that you'll see later coming up. But for now, just in the smaller time frame, or in the daily time frame, right? Once we get that 50% pullback, now we know, okay, this is going to be a good low. Price moves higher. You can repeat the pattern. Let me show you an example on Walmart. Same thing. Okay? Oops. Price starts low, high, pullback way more than 50%, right? Almost even, which is really good. Come back, 50%, back higher. Another one, 50%. And yeah, typically you can just eyeball it. It's not always perfect. You can always just drag it out, but you can see we're constantly making lower lows and lower highs. Sorry, higher lows and higher highs. So you can see that's our low. Then we end up making a new high. That's our low. We pull it back, we make a new high. That's our low. We pull back, so we break this high here. And then we get a pullback here, then we move up. And this pullback right here, you may be saying, Jordan, right here, we end up breaking that low, right? Wouldn't that be start to see a downtrend, right? That's the same pattern you're talking about, just like this, right? We break this low, that's a shift in trend. Shouldn't we start to get bearish? No. Why? Because this is not a strong low. This is not retrace 50% from this low here, which means it's not in a good deal in this scenario, which means institutions are not buying right here. Okay? Maybe they were in terms of earnings, right? Maybe they had some insider info. But typically, They're going to be waiting for that 50% retrace. And you can see exactly how the market likes to work. Prices start to go in an uptrend. They have good earnings. Now a bunch of retail. Everyone wants to buy. And then what do? They take it lower. Where do they take it lower to? Right below this key support line, stopping everybody out. And then they move it up higher. You guys see where I'm getting at? And if we pull the retracement from the low to the high, now we end up getting that good deal. Now price, now that we've established a new range, price has now entered a good deal. I mean, you could have entered it down here, but down here, okay? Really, really simple stuff. By simply using the 50% retracement tool, you're going to know exactly where the real trend is, okay? And you're going to understand that this is all a fake. So when you try and buy this pullback here down to demand, you put your stop loss right here, right under that low, and then you get stopped out, with the 50% rule, that shouldn't be happening, okay? And the reason why this works so well as well is because people put their stop losses right below new lows of an uptrend, which is a logical stop, right? If price is an uptrend, price should not be going lower than the previous low. So it makes sense to have your stop loss right below it. So when we see something like this and we understand that institutions are not going to be buying in this area, you can see exactly how it plays out. You get earnings, Amazon goes up, a bunch of retail buys. We even get a huge pullback, a bunch of retail, they keep buying, and then boom, they shake everyone out here. Now everyone starts getting bearish. It's a bear trap. Institutions get long, they bring it up to new highs, and they sell up here. The same thing happens every single day. It's the same pattern, okay? So hopefully this video made sense, okay? The next video, how to spot a fake trend, part 2, is going to be more over another way to spot a fake trend, because trust me, there's a lot of ways that they'll fake you out. This was just one of them. So hope you guys enjoyed this one. Study it, take some notes, and I'll see you guys in the next video. All right, welcome to video 3 of Mastering Market Structure. So we're going to talk about how to spot a fake trend, part 2. So I showed you in the last video about the 50% pullbacks, okay? Now this one is a little bit different, but it is definitely something you need to pay attention to because it happens a lot, especially in the futures market as well, but also in stocks in every market. Happens all the time. It's a huge fake out. So as we mentioned before, uptrend, higher highs, higher lows, things like that. When do we see that shift in trend? When price breaks that low, we need to think about the 50% rule. Now, the one thing we haven't talked about is, essentially talking about fake traps again, right? And so I'm going to show you exactly what that means. So let's take a look at NQ. Now, NQ at this point in time, very clearly in a downtrend at this pattern, okay? We can see price goes low, high, low, high, low, higher high, question mark, and then low, and then high, and then continues going on. And this is what we're going to talk about right here, where we start to see Jordan, price ended up breaking that high. In a downtrend, highs should hold. Why was price able to take out that high? Shouldn't that mean price is going to be in an uptrend now? Shouldn't we be buying this pullback for a move higher? Jordan, what are you talking about? I understand. We're going to break that down for you right now. So we have all the properties of a downtrend, right? We have a high, we make a new low, okay? We have a high, we make a new low. So this is our strong high. So the first thing we do is when price is coming up to this, we say, okay, the price pulled back more than 50% from this high to this low. Yes. I mean, we went basically all the way past it. So we know that this is our high we want to play, and the price ended up breaking it right here. Now, why did price break this high but then not make a higher low and then move up? Why did we go back lower? And the reason is called something that you've probably heard of, which is called a stop hunt, okay? These are very common all the time. It's actually one of the strategies I use in my 3-phase system. But a stop hunt is something that you need to pay attention to, okay? I have an entire strategy around it. But we're just going to go over what it is and how to spot it with market structure. Stop hunts are basically where price takes out a low or a high. We just wick right above it or below it to get some liquidity and then end up going back in the original trend, okay? Happens a lot, okay, especially in the futures market. You can see there's pretty much another one right here. Price just barely takes out a lower high, just by a few points, a few ticks. We end up ripping right alongside the other way. So first thing is, how do we know if this is a stop hunt versus a real trend, right? How do we know, how do we know this move right here isn't a stop hunt of these lows? And then we can, look for it to continue moving higher. Well, the properties of stop hunt are pretty simple, right? The only thing you have to recognize is this not a stop hunt or is it? And really, you can tell simply by looking at the candle close, okay? There's a few other ways to look at it that are a little bit more specific, a little bit more in detail. But for the basics, all you need to know is that if price just wicks above or below a high and then immediately reverses and starts going the other way, just like right here, it's a stop hunt. Okay, it's on a 30-minute chart. You can see on an hourly chart. You can see on the 2-hour chart. Now, what if, let's say on this 30-minute chart here, price were to close above this high and then continue moving a little bit higher? That, in my opinion, now would be not a stop hunt. Why? Because price was able to close above it. Okay? The thing with stop hunts is that they happen extremely fast. So price, at least in a higher time frame sense, shouldn't close above that high if it's a stop hunt. Okay? You can see down here, price made a low, broke that low, we had a few candles below it, we easily closed below it, right? We had a few pieces of consolidation below it, right? It wasn't just a wick right through an immediate reversal. Okay? You can see we actually broke this low again when we came right back through it a second time. Okay? So when you have price that breaks it more than once, when you have price that closes above or below a certain low or high, that's how you know that it's a real move in its favor and it's not a stop hunt. And if you know it's not a stop hunt, then you can understand that, hey, we probably have a shift in trend going on. But when price just barely comes up, wicks right above it, and then immediately reverses, that's a stop hunt, okay? That does not mean that the trend is changing. It's an extremely important concept you need to understand, okay? If price does not stop hunt, shift is probably going to trend. Probably going to be a shift in trend, excuse me. If price does stop hunt, right, which is wick above and immediately go back below, then it means that the original trend is still in favor. It was just a fake out, okay? It was just market makers, institutions, whatever it is, moving price above here. There's probably a lot of stop losses right above here, stopping everyone out, and then bringing it back in its original direction. Happens time and time again. Let me show you another example on ES. Let me zoom out a little bit of a higher time frame perspective here. This is that example I was showing you in the middle, right? Where it basically was saying, hey, price is going to look crazy. How do we know what the trend is? It's very consolidative. We're in a very up and down state. How do we know what's going on? Well, let's say this is our strong low here, okay? I don't think it is because we didn't retrace 50% from this low. It's not. But let's just assume it was, okay? Sorry, talking about this one here. I think this one did, actually. From that low there. Yes. So let's say this is our strong low here, right? So if we're in an uptrend, we have our low, a high, a low, the price makes a new high, okay? Now at this point, I'm just going to clear this up so it's a little bit easier to see, right? This is what our trend looks like. Just make it a little bit higher. At this point, we're saying to ourselves, Jordan, we're in an uptrend, okay? We want to be buying pullbacks in an uptrend. So if price pulls back, I want to buy for a move higher. I want to put my stop below this low because in an uptrend, lows shouldn't break. And I want to target the highs up here. You want to be setting up a trade like this, okay? Now, in this case, you would have gotten stopped out, right? Let's say you bought the pullback right here, down here. Then you put your stop right below that low. You would have gotten stopped out. You got a wick right below, and then we end up going and making new highs all the way after that. So how do we avoid this? How do we know that, Jordan, this low is actually not a strong low? This is a low that we don't want to put our stop under. How do we know that? Well, a low only becomes strong. For example, this one only becomes strong when we break the previous high that was formed, okay? But we don't just not stop hunt it. That didn't make sense. What I mean by that is that price cannot stop hunt this high. If price stop hunts this high and we immediately reverse, this low is no longer valid. This is not a low that you want to be putting your stop under. Okay? So if we look here, originally this was our low that we were looking at. So we could have bought the 50% pullback here, right? We could have got in here, put our stop low this low, target the highs, and we see the uptrend form, and then price ends up making a new high. But then what do we see here? For the daily time frame, price stop hunts that high. We wick right above it, and we immediately dump. Right? Very fast. Very, very fast. Same thing with the 2 hour. We wick right above it, we immediately dump. This is a stop hunt. This was a trap. This trapped a lot of bulls. When you see that happen, you have to ask yourself, okay, if this low, we were able to take price above this high, but we weren't able to really, have a real break of this high. It was just a stop hunt. So if it's only a stop hunt, then this low is not real, right? These buyers, this low, there's nothing controlling that low because we didn't have enough strength to take it above this high. When I mean take it above, I mean really get above it and break it through, okay? We were only able to stop hunt it. When you only are able to stop hunt it, this low becomes invalidated, which means you don't want to put your stop below that low, okay? I know that's a little complicated, but let me go ahead and just show you here. Even if we have the 50% retrace, we just barely stop hunt above that high, barely get above it, we immediately dump. You don't want to be buying this pullback here because we can easily take out this low and then continue moving higher. Simply because we stop hunted this high. We didn't break it. We didn't take it out. We didn't go all the way above it like here. We just quickly stop hunted it. And so the low that stop hunts the high, I'm going to say this one more time. Write this down if you need to. The low that stop hunts the high is not a real low. It's not a strong low. It's not a low that you want to put your stop under. Okay? Because people who shorted here are going to be targeting right down there. And then they're going to be buying for another move higher. This pattern happens a lot as well. It's a huge trap. It happened all the time. Right? Down here, price took out these lows. Right, remember that 50% rule? This right here trapped all the buyers, right? It trapped a bunch of shorts. They squeezed it up, trapped a bunch of longs who trying to buy the breakout, and they took it back over and stopped everyone out who's long buying this pullback here. Okay? It's extremely important that you're able to understand if price stop hunts a high or if it actually takes it out. If you can understand that difference, you can really understand who's in control and how to move with that. So I hope you guys enjoyed this video. Very, very important video. Make sure you study it. Might have to rewatch it. The best thing to do is look back on the charts, understand, just study for yourself, see what's going on. But with that being said, guys, I'll see you in the next video. All right, guys. So this video is going to be a good one. All right. It's about time frame analysis with trend. I get asked all the time, Jordan, what time frames do you look at? How do I know which time frames to look at? I'm going to break that down and apply it to trend and market structure in this video. So first thing, let's go ahead and just look at this, okay? Here's a concept that you guys need to understand, okay? We all need to understand this. You can have multiple trends in multiple different time frames. It can get very complicated very fast. What I mean by that is, let me show you this. We could be in an overall uptrend, okay? Let me redraw that actually. We can be an overall uptrend, higher time frame uptrend. We can be downtrending in the uptrend. And in this downtrend, we could also be uptrending here. Just like this. See what I mean? We have three trends going on. We have the biggest trend, or the biggest time frame, we're in an uptrend, right? High, low, high, low, high. In the medium time frame, we're in a downtrend here, right? Low, 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 low. And in the even smaller time frame, for example here, we're in an uptrend again. Higher highs, higher lows, higher highs, higher lows. This is where things get really complicated, okay? Because you can look at trend as a multi-time frame analysis. You always need to be looking at a multi-time frame analysis because you're going to be getting very confused, like, hey, we're in a downtrend. You know, you could be saying that right down here. And then you look to get short, and then we just get squeezed higher, okay? So understanding trend with time frame is extremely important. Let me look at ES right here. Beautiful, beautiful example. Price is in a very clear uptrend, higher highs, higher lows, etc. And then right here, if we were to zoom in, we'd see prices making lower lows and lower highs, just like this. Right? I could zoom in right here. You could say, Jordan, we're making lower lows, lower highs. And then at this point, price goes up, and you're like, hey, we're in a downtrend. We're making lower lows, lower highs. Jordan, let me get short. Let me short right here, put a stop above this high. You know, aiming for new lows all the way down here. And then you end up getting stopped out. You're like, what the heck just happened? We're in a downtrend. The key thing you have to remember, is you need to understand what time frame you want to be trading, what you're looking at. Okay? Extremely, extremely crucial. Now, what time frames you're going to be looking at and which one you're going to be trading is all dependent on you and your strategy. If you're a scalper, you're looking at the 1 minute chart, right? You want to get in and out in a few minutes, then the overall trend in the weekly time frame isn't going to matter that much to you. But if you're a swing trader, maybe you're getting in and out, in a few weeks or whatever, you're looking at the hourly chart, and we're in a situation like this where you want to get short right here for a 2 to 3 day swing for a move down lower. If you're not looking at the higher time frame, understanding that we are in an uptrend, you're going to be shorting in the wrong time. You're going to be shorting in the wrong time, okay? So you need to always look at your time frames, understand what's going on in the larger context, okay? Because we can be in a situation, really pay attention here. We can be in a situation where price is pulling back like this. We have a 50% pullback. Everything's looking good, right? And let's say you decide to get short right here on this pullback, expecting another move lower. Because you're looking at this time frame. You're saying, Jordan, right? We're in a downtrend right here. I want to look to get short for another move lower. And we end up just ripping right above. Because if you're not looking at the higher time frame trend, you start to say, okay, I'm going to get short, and we just end up going higher. Now, the best thing to do, this is extremely important, is you typically want to look and take lower time frame trades with the higher time frame trend. Okay? So if we are in an overall uptrend, you typically want to stay away from shorting in a downtrend. Now, you may be saying, Jordan, well, this is like a daily time frame, and we're looking at a 5-15 minute here. Are you sure, it's okay. I can probably just take a 10 to 15 minute scalp, whatever. And you can trade it that way. Of course you can do that. I'm not telling you what you can do. Me personally, I want to have the best edge in my favor. And so the best edge is going to be buying pullbacks of this trend here. Make this blue, right? When price is in an uptrend in a higher time frame, and you're buying the pullbacks here. Let me redraw it. Actually, this will be easier to see. I didn't draw this the best. Let me draw it like this. Just like this, right? And we go lower. Because you got to understand, price does this, right? Price is not making straight lines like I'm drawing them right now, okay? Price goes up and down. We have, uptrends inside of a higher time frame uptrend. We have downtrends inside of a higher time frame uptrend as well. And so if you're buying the pullbacks on the legs of the uptrends, if you're buying pullbacks in this area or buying pullbacks in this part of the move or this part of the move, you're giving yourself a much higher probability of success simply by following lower time frame trend with higher time frame trend. When you combine trend, you give yourself an automatic edge in the marketplace. You need to understand that. You're literally just giving yourself an automatic edge. And when you're going against the trend in a time frame perspective, right? Because trust me, there's going to be opportunities where price will be in an uptrend, and you'll see a really solid short setup, like right here. But if you understand we're in a higher time frame uptrend, and you want to have the best edge possibility, and the best edge possible, and the best chance for success, you want to go with the higher time frame trend. Okay? So I know this was a short video, but I wanted to quickly touch on this topic because it is extremely important. And doing a simple tweak like this, just focusing on the higher time frame trend and trading the smaller time frames in line of the higher time frame trend, that itself is going to give you a massive edge in your trading. So I hope you guys enjoyed this one. I'll see you all in the next video. All right, so last video of the course, unless I end up adding to it or making it more. But yeah, we're going to go over scalping with the trend. Now, this is a strategy. This is actually really cool. This is something that I do. Doesn't use any indicators. Don't even need volume. And it's just a 1 minute chart. It's a scalping strategy you can do solely using market structure. That is it. Okay? Like literally nothing else. No indicators, no supply demand, no volume, no nothing. Okay? And it's basically just playing the trend. Okay, it's identifying a shift in trend and then going with that move. So, how do we do this? Well, you look at the 1 minute chart. We'll pull up a stock like Meta. I'll show you another example. But you want to just wait. The first 15, 30 minutes, depending on what happens, you just want to wait. You want to wait for price to identify a certain trend. As you can see with Meta in the beginning, you can see we go down, we go up, we make a low, we go down. We're pretty clearly in a downtrend, right? We go down, high, low. We've made a move lower. All right, we're in a downtrend at this point. And so what do we want to see? We want to see price end up breaking this high or breaking this high for us to say we're now going to be in an uptrend. And so what does price do? Price ends up breaking that high. So when price makes a low and we make a new high, we end up shifting trend. We now understand that buyers are in control, right? This is a shift in market structure. This is a shift when price moves all the way up here that we now know price is now making higher highs and higher lows. We are now in a confirmed uptrend. Okay? And if we know this, we say, okay, well, let's go ahead and wait. Let's wait for a pullback and simply just play the trend. That's it. When price starts in a downtrend and we end up breaking that trend, you play the uptrend. Okay, you play this pullback here, or you play this pullback here, or you play this pullback here. That's all it is. So when price ends up going higher, we wait for that pullback. Now again, what's that key thing that we talk about? If we want to have a good risk reward, we're the 50% rule, right? We don't want to be buying on these shallow pullbacks here. Because again, that's not where institutions buy. And if our logical stop is going to be at the last low, and we want to target the high, it's not going to be a good risk reward. Okay, if we're getting in here, stops at the low and it targets the last high, it's a 0.5 risk reward. Right? We want to have a good risk reward as well. So we wait, we ask ourselves, okay, price pullback 50% here, so this is our strong low. We didn't do it there, blah, blah, blah. And we end up doing it here. Okay, so when price ends up finally making this high all the way up here, from this low all the way up to this high, we can now get our 50% pullback right here. Again, same thing. We take out this low and this low here, right? We trap a bunch of the bears. They break this low. They start to think, hey, we're starting to be in a downtrend. That's actually where you want to buy. And so you can easily set up a trade where you get long right at the 50% mark, put your stop at the low, or that low, where our 50% mark was drawn. We target the highs. It's a nice one-on-one risk-reward trade. Now, one-on-one risk-reward trades aren't ideal, okay? It's not perfect, right? Obviously, you want to shoot for more. This is just a basic rundown of the strategy, right? Ideally, you want to look for other confirmations, right? I look at volume. I look at supply demand. I look at a lot of things, okay? I keep my trading simple, but I do look at a lot of other things to give myself a much better edge so I can hit 2R, 3R, 4R trades. But if we're keeping it simple, simply looking at market structure, this is something you can do. And what does price do? Pull back all the way down lower. If you wanted to, you could wait for the 50% retracement. Oops. From this high to this low, get in right there, put your stop at the low, target the high, and there you go. You obviously hold some runners, get a nice 2R trade in there. But simply looking at market structure, understanding who's in control, you can have a strategy. Now, let me show you one more on SPX. Okay. If I can find it, it's over here. All right, this is another example. Simply looking at market structure, you can understand who's in control and what's going to happen. Okay, so what does price do? This is extremely important. Really want you guys to dial in and listen here. Take some notes. Price starts in a downtrend. We have a low, we have a high, we have a low. Okay, we have a downtrend. Now, when price breaks that high, we start to see confirmation of an uptrend, right? So price breaks that high. Now we'd see price is in an uptrend. So at this point in time, this is very crucial to understand, okay? At this point in time, when price is all the way up here, or technically right above here, we know that this low should hold. Why? Okay? Well, if we know that price was in a downtrend, And now we're in an uptrend, just like this. This is the exact same layout as price right here, right? I'm going to just draw it in like this. We now know that this low should hold because in an uptrend, lows hold. So price is not going to go below this low. That's the thesis that we're trading based off, right? You always want to trade based off a thesis, one that makes sense, a logical one, right? And so if we know that this low should hold, then we know, okay, let's wait a second. If we know this low is going to hold, then we want to put our stop right below that low. That's a logical place to put a stop. So if we know our stop is going to be at this low, we also know, where does price go in an uptrend? It goes up to that recent high, right? It goes back up to that high. It goes towards liquidity, which in itself is a whole nother topic. But for this purpose, we know that price wants to go up to this high right here, okay? So when price goes up, we make that high. Let's say we're in this situation right now. Let's say price is right here, and we're able to identify all of this, okay? Price is sitting right here. We understand price is not going to go below this low. It's not guaranteed, right? But that's our strategy. That's our thesis. And that price wants to go back up to its high. Price wants to make another high if it's in an uptrend. So then all you need to do is simply identify what risk reward do you want. And you can just pick wherever you want, and then you can enter. Right? This is trading with logical entries and exits. Okay? Extremely important to understand, right? We're not just putting our stops in random places. We're not putting our targets in random places. If you understand market structure, you can understand and get a bias and understand, hey, at this point in time, the edge is in my favor. There's a probability, a good probability, that price is not going to go below this low. And if you know that, there's a million ways you can make money off that. You can do it through credit spreads. You can do it through just getting in here, putting your target up there, putting your stop below this low, right? You can wait for a pullback to a supply zone or a demand zone. You can use volume, right? There's a million ways you can craft it. Now, there's just specific ways that I craft it in my strategy, but that's for a whole, that's a whole thing on itself. But for this, simple purposes, right? That's what we know. We know where a logical stop would be. We know where a logical target would be. Then it's up to you to identify, do I want to again right at the 50%, go for a 1-to-1 risk reward? Do I want to wait for a demand zone all the way down here? Maybe I won't get it. Maybe I will. That's a nice 3.7 hour trade. Maybe you're just, you want to get in all the way up here. You don't care about your risk reward. You want to do that. That's not ideal, right? It's not typically how we want to trade. But at the end of the day, it's up to you. And then you can spend the rest of the day knowing and understanding that buyers are in control and that price shouldn't go below this low. Now, again, you can look at higher time frame context. You can look at, there's a million things that are going to affect price. It's not going to be 100%. But if you have an idea of the market structure on a specific time frame, and you can identify where's the logical stop, where's the logical entry, which lows and which highs should hold and shouldn't hold, you can have a money-making strategy based off that. And that is what I use in all of my trading, and it makes sense. And I hope that it makes sense for you as well, because it should. It's logic. So that is basically going to be it. Hope you guys enjoyed this series. Hope you guys enjoyed this video as well. Like I said, market structure is just one piece of the puzzle. Okay, I look at a lot of different things. It is the backbone of my trading, along with supply, demand, and a few other things. But it is extremely important that you guys can understand this and use it in your trading as well. So I hope this did, make sense to you. Hope you guys learned from it. If you did, tweet at me, right? Give me a shout. Twitter, you leave a YouTube comment. I don't really answer my Discord DMs if you're finding me in Discord. But give me a shout on Twitter. Send me a DM. If you want to learn more about exactly how I trade and my exact system and what I do for my exact criteria for entries and exits and how I look at higher time frames and all that stuff, send me a DM, okay? We'll get you set up on a call and get you inside my one-on-one mentorship. But I hope you guys did enjoy this. All right, let me know how it was. I can definitely make more, whether it's market structure, whether it's a brand new topic. I'm always down for that. So let me know. Hope you guys enjoyed this series. And yeah, I'll see you guys in the next course, whatever it is.